Good afternoon, investors. You are now on Kleverstock with me, Ainun Jaria, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia opened higher on Friday today, tracking gains across regional markets as a stronger ringgit improved market sentiment amid a firmer overnight performance on Wall Street. At 9:10 a.m., the FPM-KLCI rose 3.09 points or 0.19% to 1,649.99 from Thursday's close of 1,646.90. The index had opened 1.15 points higher at 1,648.05. The market breadth was positive, with 187 gainers outnumbering 110 losers. A further 299 counters were unchanged, while 2,182 were untraded and 16 suspended. Turnover amounted to 151.83 million shares valued at 72.55 million ringgit. Regionally, Hong Kong's Hang Seng Index gained 0.12% to 25,498.13. Japan's Nikkei 225 Index increased 0.93% to 49,459.35. South Korea's Kospi Index edged up 0.33% to 4,007.65, while Singapore's Straits Times Index was 0.11% lower at 4,570.61. Rakuten Trade Senior Berhad Vice President of Equity Research Tong Pat Leng believes the strengthening ringgit, currently trading around 4 ringgit and 8 cents against the US dollar, may attract fresh foreign fund inflows. He said, as such, we expect the benchmark index to hover within the 1,645 to 1,660 range today. At 8 a.m., the ringgit strengthened to 4.0820 or 4.0940 against the US dollar from 4.0840 or 4.0880 at Thursday's close. Thong also noted that Wall Street closed firmer overnight after November's U.S. Consumer Price Index CPI came in below expectations, brightening prospects for further interest rate cuts. He added that alongside recent weak job data, many foresee the U.S. Federal Reserve will continue with its easing policy. Among the heavyweights, Maybank gained 4 cents to 10 ringgit and 34 cents. Public Bank rose 3 cents to 4 ringgit and 44 cents. CIMB and Tenaga Nasional were flat at 7 ringgit and 88 cents and 13 ringgit and 30 cents respectively, while IHH Healthcare added 1 cent to 8 ringgit and 51 cents. On the most active list, Valesto and Pharmaniaga were unchanged at 28 cents and 26 cents respectively. Omesti inched down half a cent to 8 cents, while Insight Analytics advanced 4.5 cents to 99 cents, and Magma inched up half a cent to 36.5 cents. Top gainers included Fraser and Neve, which climbed 28 cents to 35 ringgit and 88 cents. United Malacca added 15 cents to 5 ringgit and 89 cents. Petronas Dagangan rose 14 cents to 19 ringgit and 54 cents. Nestle gained 10 cents to 116 ringgit, and Aeon Credit bagged 7 cents to 5 ringgit and 62 cents. Among top losers, United Plantations fell 24 cents to 29 ringgit and 48 cents, while Petronas Chemicals and Negeri Sembilan oil pumps each lost 5 cents to 3 ringgit and 52 cents and 5 ringgit and 75 cents respectively. Solubas and Press Metal Aluminium were 4 cents lower at 3 ringgit and 16 cents and 6 ringgit and 96 cents respectively. Moving on to local currency update. The ringgit opened slightly higher against the US dollar on Friday, holding at the 4.08 level, supported by growing expectations of a softer US monetary policy outlook and recent global central bank developments. At 8 a.m., the ringgit strengthened to 4.0820 or 4.0940 against the US dollar from 4.0840 or 4.0880 at Thursday's close. The Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said expectations of an interest rate cut in 2026 have been gaining traction. Following softer than expected U.S. inflation data, it was reported that the U.S. inflation in November came in below expectations at 2.7%, compared with consensus estimates of 3.1%. Similarly, core inflation moderated to 2.6% from 3.0% in September. He said, having said that, October's data point was not available due to a government shutdown, which occurred for 43 days beginning in October, resulting in the inability to compute sequential data points such as month-on-month figures. Meanwhile, he said global monetary policy signals were mixed, with the Bank of England having cut its bank rate by 25 basis points to 3.75%, marking its fourth reduction this year amid persistent moderation in inflation. In contrast, the European Central Bank kept its policy rate unchanged, following an upbeat assessment of growth and inflation next year. He added that despite the softer US inflation, the US dollar index rose 0.07% to 98.441 points overnight, while the ringgit closed at 0.09% higher on Thursday, outperforming most Asian peers. Perhaps today the ringgit might test a breach of the 4 ringgit and 8 cents level, as the case for a lower US federal fund rate in 2026 is building up. At the opening, the ringgit traded mostly lower against a basket of major currencies. It depreciated against the British pound to 5.4629 or 5.4790 and fell against the Japanese yen to 2.6234 or 2.6313, but edged up against euro to 4.7861 or 4.8002. The local currency, however, traded mixed against ASEAN peers. It weakened against Singapore dollar to 3.1639 or 3.1736, slipped versus the Thai baht to 12.9810 or 13.0287, almost flat against the Philippine peso to 6.97 or 6.99, but inched up against the Indonesian rupiah to 244.1 or 244.9. Now for some local economic news. Malaysia remains among the top travel destinations, with Airbnb data showing year-on-year increase in nights booked during the first half of 2025. Kuala Lumpur was the most booked Malaysian city, while heritage destinations such as Penang, Malacca and Kuching stayed popular with international visitors. Against this backdrop, Airbnb, in collaboration with Think City, launched with the Airbnb Heritage Guide to Kuala Lumpur, a digital guide on heritage sites and creative neighbourhoods, including the emerging Warisan KL. The initiative aligns with Malaysia's efforts to expand heritage tourism ahead of Visit Malaysia 2026, with local stories helping to position Kuala Lumpur as a cultural destination. Domestic travel continued to drive growth, with Malaysia remaining the top choice for local travellers in the first half of 2025. Key international markets included Singapore, China, Indonesia, the United States and France, with France recording the fastest growth. Airbnb said solo travel rose during the period, while group travel of more than 5 people remained the most common, pointing to opportunities for community-based accommodation and greater local economic participation. Airbnb country head for India and Southeast Asia, Amanpreet Bajaj, said partnerships between the public and private sectors can help support communities and promote responsible tourism. He said home sharing plays an important role in attracting diverse travellers and supporting the long-term growth of Malaysia's tourism sector, ensuring benefits are shared between travellers and local communities. Think City Managing Director Dato' Hamdan Abdul Majid said Kuala Lumpur's heritage, culture and community life are being revitalized through collective efforts across the city ahead of 2026. Still on local news update. Malaysia's bonds and sukuk supply is projected to rise to 185 billion ringgit in 2026 from 168.5 billion ringgit in 2025, mainly due to higher refinancing needs. Analysts said the total number of bond auctions is expected to increase to 37 in 2026, from 36 previously, to accommodate larger issuances of Malaysian government securities, MGS, and government investment issues, GII. Now, according to Bank Negara Malaysia's calendar, there are 18 auctions scheduled for MGS and 19 for their Islamic counterparts, GII, including both new and reopenings. The Central Bank is scheduled to carry out 3 auctions per month, with a high frequency of 4 auctions in June, August and October. and only one auction in December. Now, Bank Muamalat Malaysia Berhad, Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the sizable issuance of MGS and GII next year is largely to account for higher bond redemptions. Now, Muhammad Afzal Nizam said this is estimated at around 118.7 billion ringgit, as well as to finance the fiscal deficit projected at about 75 billion ringgit. Now, he said this should not be a cause for alarm, as the government has been prudent in managing its finances, as reflected in its ongoing fiscal consolidation policies, particularly measures related to taxation and the optimization of expenditure, especially subsidies. We'll now take a short break, but don't go away. We will return shortly with more corporate news developments. Welcome back to the Midday Roundup. Let's continue with corporate news developments in Malaysia. Sunway Construction Group Berhad Suncon newly secured contract for a data center development in Johor is significant, marking its first job win exceeding 500 million ringgit in more than 6 months. Maybank Investment Bank Berhad, or Maybank IB, said the latest awards lift Suncon's year-to-date job wins to 4.6 billion ringgit, representing 92% of its financial year estimate, while the group's order book now stands at 6.1 billion ringgit. In May, Suncon secured 2 work orders valued at 1.16 billion ringgit to undertake general contractor services for 2 data center projects awarded by a United States-based technology company. It said although fewer than 2 weeks remain until the end of the financial year 2025, Suncon is hoping to secure 2 additional data center projects and 1 more internal job from the Sunway Group before year-end. Assuming a pre-tax margin of 8%, Maybank IB expects the latest job win to contribute 34.2 million ringgit to Suncon's core net profit, or about 3 cents per share over the project duration. The research house maintained its earnings estimates, which are based on job wins of 5 billion ringgit in financial year 2025, 6 billion ringgit in the financial year 2026, and 6 billion ringgit in the financial year 2027. Maybank IB reiterated its hold call on Suncon with an unchanged target price of 5 ringgit and 63 cents. It said while we welcome this job win, we would like to see more consistent contract awards before revisiting our recommendation or target price. It added that every 1 billion ringgit reduction in annual job wins would lower its long-term earnings per share estimates by 4 cents and reduce its target price by 1 ringgit and 6 cents. Up next, we have some business news updates. United Malacca Berhad's first half financial year 2026 results came in above expectations, driven by stronger than expected production and a lower effective tax rate. This was said by CIMB Securities Sdn Berhad. The planter posted a net profit of 55 million ringgit in the second quarter, lifting first half of the financial year 2026 net profit to 91 million ringgit. Now, this accounted for 89% of the research firm's full-year forecast and 80% of consensus estimates. United Malacca declared a higher interim dividend of 7 cents, which CIMB Securities said exceeded its full-year dividend forecast of 12 cents. Now, Malaysian plantation operations remained the group's main earnings driver, contributing 81% of total earnings before interest, taxes, depreciation and amortization EBITDA for the 6-month period. However, EBITDA growth at the Indonesian operations outpaced Malaysia's, aided by a lower base. It said EBITDA from Indonesia surged 2.49 times year-on-year to 28.4 million ringgit, supported by higher fresh fruit bunches production from prime-age palms and stronger average palm kernel prices of 3,200 ringgit and 240 ringgit per ton. High production volumes also helped lower unit production cost, further lifting profitability at the Indonesian estates. CIMB Securities said the strong second quarter showing was encouraging and indicated that efforts to improve yields in Indonesia were gaining traction. The research house maintained its earnings forecast and reiterated a buy call on United Malacca with an unchanged target price of 6 ringgit and 42 cents. And finally, wrapping it up, we have major corporate developments and deals across Malaysia. Sunway Construction Group Berhad secured a 570 million ringgit contract from US-based tech multinational to undertake core and shell works for a Johor data center. CIMB Group Holdings Berhad plans to develop tokenized suku as part of its broader push to support Malaysia's digital capital markets, covering tokenized assets, settlement infrastructure, and next-generation payment systems. Garang Holdings Berhad announced that its 60% owned subsidiary Tenaga Aspirasi Sdn Berhad today signed a large-scale solar photovoltaic power purchase agreement with Sabah Electricity Sdn Berhad. Yinson Renewables, the renewable energy arm of Yinson Holdings Berhad, has acquired the right to the Mount Cass wind farm in New Zealand, had a total installed capacity of 94.6 megawatt. And last but not least, Advancedcon Holdings Berhad said its wholly owned subsidiary Advancedcon Infra Sdn Berhad has been appointed by Damai Jaya Realty Sdn Berhad as a contractor for proposed earthworks worth 90.3 million ringgit for an industrial development in Ijo, Kuala Selangor. Now that's a wrap from Midday Roundup with me, Anunjaria, on Kleverstock. Thank you for choosing us, investors. Stay tuned for our upcoming program live streams.